Today, I want to talk to you about a little known secret that can eat away at your retirement savings or your college savings or whatever you might have saved up that you want to use in the future. The excerpt of the video that I want to show you that explains what can rob you of some of your precious pennies comes from a PBS Frontline called The Retirement Gamble. But we don't need to watch the whole thing for this. We're going to keep this short and sweet.
To understand this fee business, I went to talk to someone who has thought long and hard about it. Jack Bogle, the founder of Vanguard, a company that offers some of the lowest fee products on the market. He says that if you want to improve your retirement outcome, make sure to minimize Wall Street's take.
Costs are a crucial part of the equation. It doesn't take a genius to know that the bigger the profit of the management company, the smaller the profit that investors get. The money managers always want more, and that's natural enough in most businesses, but it's not right for this business.
But now that we know it's the fees, let's see how much it can cost us.
Assume you're invested in a fund that is earning a gross annual return of 7%. They charge you a 2% annual fee. Over 50 years, the difference between your net of 5%, the red line, and what you would have made without fees, the green line, is staggering. Bogle says you've lost almost 2/3 of what you would have had.
What happens in the fund business is the magic of compound returns is overwhelmed by the tyranny of compounding costs. It's a mathematical fact. You really want to invest in a system where you put up 100% of the capital, you the mutual fund shareholder. You take 100% of the risk, and you get 30% of the return.
You put up 100% of the capital, you take 100% of the risk, and you only get 1/3 of the return. There are options out there that can reduce the fees. In fact, what's very popular today is something called an ETF. And these do generally have lower fees than your standard mutual fund. They can look and feel very much like a mutual fund, but the expenses are far less. Whenever you're selecting a fund to invest in, look at the little box that says expense ratio. Certainly, you want to get something that's going to give you a good return, but the expenses make a huge difference. Watch your fees, and the reason why is you can lose a lot of pennies.